Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, November the 29th, the year's 2020. Let's talk trading. It's time for the weekly open and gap. Just so you know, these videos are for educational purposes only, and your results may differ from mine. Okay, we're going to look at the week here, and as you can see, we still have some gaps that haven't filled, and one of them being the pound has not filled that gap. Almost, but not quite. And we can see we're now putting in the opening range for the week, the high and the low for the day right here. And we're above the opening range for the year. 68 pips above that high for that first day. Now, there's something I want to talk about on this particular chart because I think a couple of weeks ago somebody was asking me about, I guess, swing trading or trading on the higher time frames or longer trades, etc. So I've got the GPS here, and this is an old 2014 indicator, multi-frequency GPS. And it's multi-frequency because we've got the year, the month, the week, and the day. And so that's what I mean by multi-frequency, as opposed to multi-pairs where we have, like on the dashboards, all the different pairs. Now, what we're looking at is something here. The high for the month, we're 64 pips below the high of the month. Now, earlier or last week, you can see we were making highs here. This was like at zero. We were making monthly highs. And then also for the year, you can see we were pretty close to that high for the year also. So what's going to happen? Price is going to make a new high for the day, month, or year, or whatever period you're looking at, or frequency, and then it's going to reverse off that high. And the same for the low. So when you want to analyze your trades for the week and set out maybe making a trading plan, you want to note, how close am I to the monthly high? How close am I to the yearly high? And then if you run the frequency distributions, you'll see where those numbers usually fall. So for the month, we'd have to look at a frequency distribution for the month and see how far back does that usually pull back by the end of the month. And considering at the end of the month is technically today, the 30th, because see, even though where I'm at in the USA, it's November 29th, it's really where this server is, it's Monday, November the 30th. So you see, so what are the chances of this number increasing or decreasing? And that's what you're going to use the statistics for. So when you're plotting out your trades, even if this wasn't near the end of the month, this is what you want to do. And you want to analyze this for December, saying, okay, where were we? Were we near that November high, that high of the month? Are we going to break out? Are we going to pull back? Those are the types of things you want to look at and then plan for. So you can see here, we hit that yearly high, and then that day closed. Then the price came up. You can see actually broke out of that two prior days. It broke out of that high, but it couldn't hold it. Turn around, hit the buy zone on the daily, hit that daily open, and then came down. So those are types of things you want to look for. So once again, looking here, you can see here where these wick zones are. You see here you're cutting through 1, 2, 3 wicks. Up here you'd be cutting through 5 wicks, and see if price is going to come out of that wick zone to the downside or to the upside. You don't know. You have to trade what you see. So that's just one thing you want to look for, looking for these highs or these lows. Okay, and here you have a turn trade. You have a bull candle followed by a bear candle, so price is turned, and then maybe you play that turn. So even though it tried to turn up, it couldn't hold it, and when it turned back the other way, you take that trade. And then at the bottom, it's just the opposite. You see a red followed by a bear candle, followed by a bull candle. Then you can see here, it tried to make the turn, didn't, but then it turned big time here. Just things to look for when you're looking at the time frames, the daily, weekly, monthly, the upper time frames. And we're in the inside bar that happened 4 days ago. You can see here. So you can look for a price break to the south at 92, and let's call it 33.80 to the north. Inside bar action, looks like we do have some inside bar action on some of these pairs this week. Plenty on the month. We've got some on the week also, looking at those inside bars. Range, nothing to write home about. It's still only 6 hours into the day. So we've got no ranges over 100. Buy zone pivot was within the buy zone area here. So no real bias. And you notice this huge leg down here. Well, pretty sure there was probably something like a 20 or 30 pip spread at the beginning of this. So it's not like price, came down here and then came up and you could have made some money off of it. That just wasn't happening. Because when I looked at it, I think the spread was somewhere around 10 pips, but I didn't look at it right when it opened. And once again, looking at the rat zone here in a compressed format, you see these upper rat zones haven't quite gotten to this area. So will it get to this area or this area? You just have to wait and see. And of course, first day of the week, this is the weekly upper rat zone and the weekly lower rat zone. It's always going to be true on the first day of the week. It's that second and third day where it really makes the difference. Now, you can see we hit the weekly pivot. Maybe we did, maybe we didn't. I don't know. You'd have to look at the ask and see if the ask actually got down below there. Unfortunately, we don't have that data. We only have the bid data, and it's not closed data. Okay, weekly missed pivots. You can see here we took out that pivot. On the daily, we took out the daily pivot. And so far for November, there's 2 missed pivots here and here. And you can see we missed by 2 pips, missed by 16. Only had a couple of big misses. Usually, a lot of times these misses are single digits. So if you're fading the pivot, you can still make pips. It doesn't have to hit it to be profitable. We haven't been in any of the wick zones from the previous day here. So prices in between them. And looking at these ranges, once again for the day, only 48 pips. Let me bump this up to the monthly time frame chart period. So you can see high minus low for the month 543 or the 69 percentile. Now, high minus previous high, you can see here we broke out 221 pips to the upside. But on the previous low minus the low, we got within 35 pips. We didn't break out. And you can see that here. You can see that the previous month was an inside bar. Nice move to the upside there. If you took that trade and if you hung in it the whole time, you'd be up 158 pips right now. And then we could also take a look to the weekly here. Okay, weekly range. I think, was this the one where I might have had the problem with the indicator? Yeah, it looks like there's still something I have to figure out about the weekly. There's something, this is definitely not right here on the weekly. Not sure why it's doing that. I put it back to the daily and it's okay. There must be something goofy about the data. So there's something I'm not accounting for. Actually, I think I know what it could be. Now that I think about it, I made a change. Yeah, only use Monday through Friday, true. So I think on this particular one, close the low, if I put that to false, and then if I set this back to weekly, yeah, that's what it is. I made that because there's some brokers that have Sunday candles, and it really can screw up some of the calculations, as you can see. Let's see, 1, 2. Hmm. High minus low. That's false. Open minus low. High minus open. Previous low minus low. High minus previous high. In the weekly, high minus low. Okay, so fix that. That was bugging me. I knew it was something simple. So as you can see here on the weekly range, we haven't broken out yet, but last week we broke out by 85 pips. So you can use these to determine the likelihood that price might continue to go up or down, but you still have to trade what you see. You just, because statistics can tell you one thing, and it just kind of gives you a slight edge knowing which way to go, but it can go work against you, and that's why you always have to have your stop losses in place. And I know I don't really put this up as much as I used to. Probably should start to go back to it, because you really should not lose more in any particular trade than you're willing to lose. That's your risk management. It's just so important. And here, looking at the simple price action screen here, as you can see, not much movement today as we saw in the range charts. And then just looking at a simple price action trading screen, once again, you can trade off the 3 balls. Looking for shorts, 2 ball, looking for a long. But fellow traders, that's going to wrap up this for the weekly open. Hope you had a fun and safe weekend. And when you come back, just remember, It's not what you trade, it's how you trade it. So drain the banks. Rumple.